Hey traders, Tun Arpan here, founder of Master the Markets, Elite Traders Conference and the Traders Open Day. So today's topic, what we're going to be looking at, is basically the one question that most traders actually ask. Is price movement linear? Okay, so based on that, I would like to talk about 3 points to actually answer this question. The first one is actually to be based on human behavior. Okay, the establishment for this point actually comes for human behavior. To answer this question, we have to look at that. For example, think about this, right? You buy a particular property, let's say, or you can buy an iPad or iPhone, and you buy, let's take the example of property for this instance, you buy it at £300,000. Now, at that point when you buy it, your psychology is saying, you know what, it's cheap, in your mind, it's reasonable according to your budget. And then finally, then you're thinking as well at the same time that there will be price appreciation for this property to go up further. So a buyer usually buys any product or any instrument at the point where he starts to think this is worth its value and it's going to go up higher in price. Then when the property price then goes up from 300,000 to 500,000 pounds, at any one point the buyer might start thinking that, you know what, this has gone too far up and I don't think that it's going to go any further. Okay, at that point he thinks it's reached its top, and what does he do? He starts to sell it. And at that particular point, it starts to make peak and it starts to drop off. Now, if that is what is established by human behavior, so they're thinking that it's going to go up and it goes up from 300 to 500 and then it starts to then drop off from there, then we can understand and appreciate, because of human behavior which fluctuates from cheap or reasonable to expensive, then selling it off, then buying it back again. If that is general human behavior, that is also going to affect price movement. If we all agree on that particular logic, we can then establish that the answer for that actually with price movement is really linear is probably not. The answer is no, because if you look at any chart or if you plot any price of any instrument over time, you will never get a chart which just keeps going up like that, right? Not any straight line like this. Any company's business growth as well, if you plot it, it will never ever be in a straight line. Usually, in fact, the usual one that we usually see is like a cyclical movement like this, which then goes up and down because of this human behavioral pattern that I just talked about. That actually nicely leads on to a second point. Since human behavior is such, it leads to price moving in cycles, okay? In cycles. This is why we get the cyclical movement of people collectively thinking that something is more expensive over here at 500,000 pounds of the property, and then they're starting to sell that off, and then they're coming back to 400, and then after that, at that point, collective amount of people start to think it's cheap or it'll go up more higher. Then it reaches its next peak, let's say at 750. Of course, when collective amount of people start to think, or some news comes in and panic strikes in, and at that point, maybe massive sell-out might start to happen and may even take out the last 400,000 pound price point as well. And after that, if other good news comes in, then it might then start to go up again. Whatever it is, we can understand and appreciate because of the generic human behavior that is inbuilt in all of us and we're conditioned to, we fluctuate between the psychological beliefs of expensive and cheap, and because of that, we then do our interactions of buying and selling, and that is in opposition beliefs to another person who's also buying or selling back from the other person, okay? So that, because of the human behavior, we get price not moving in a linear fashion, in fact, moving in a cyclical fashion, as you can see. And if you put any chart up, you'll be able to see that, you'll be able to agree on that basis as well. Now, finally, that leads to me talking about the last thing about cycles is the phases. Now, let me explain about this. So when you get a cycle, you get two phases in it, okay? You get two phases. So the first phase is what we say is in line with the trend, okay? So this is an uptrend. It's pretty much simple over here, where we can understand from here. So in an uptrend over here, we can see that this phase here, this phase 1, is in line with the trend, okay? Is in line with the trend. And the next phase, which is phase 2, is in opposition to the trend. It's against the trend, as you can see over there, all right? So you can see that's phase 1. And then finally, then you can see that that is phase 2. It's going against the trend, all right? So that's what we are looking at. And that's the last part of the cycles things, which is cycles actually move in 2 phases, phase 1 and phase 2. And most traders, like ourselves, what we are looking at doing, especially swing traders, are looking to get into the sweet spot of around here before the market starts to jump up and reach its next peak. Okay, that's what we're looking to do as swing traders. So catch about the retracement phase where it starts to come down, and then to take it up to the next peak. So I believe that from this video you can understand that to answer the question of price movement being linear, those 3 points will definitely help you. One is that it's definitely not linear because of human behavioral patterns, which I just explained, fluctuating between cheap and expensive and reasonable prices. The second is it moving in cycles, and finally within the cycles, it being split into 2 phases, phases 1 and phases 2. Okay, so I'll let you all think about that and contemplate on it. And till the next time too, as we always say, stay disciplined, follow your trading plan, and keep trading like a master.